Welcome to the 27th episode of Tokenizing Everything, our weekly interview series with thought leaders in the blockchain industry. Today's guest is Nicholas Lyons, long-term blockchain expert, founder and managing director at Value Earth and advisor at Verus.io. Welcome, Nicholas. How are you?
Good morning. I'm very well. Thank you for inviting me. It's good to speak to you again.
Yeah, it's always a pleasure to speak to you. Today we have a little special episode. I know you like privacy a lot, so appreciate that you still aim to join this podcast and allow us to record this. Before we begin, I have to mention that all opinions are obviously solely personal and do not reflect the opinion of Amazing Blocks or any other involved parties. And yeah, I'm excited for today's show where you will present us some insights on your latest project that you're working on and generally in regards to the topics of decentralization versus centralization. So would you like to start by just briefly giving an overview of who you are and what your interests in the blockchain space are?
Sure. Well, my background is that I'm English. I'm living in Los Angeles currently, so I'm in the USA. And my background was that I started becoming interested in tokenization when I was at university back in the 90s at Reading University, which was specifically for the real estate business. And it's a very well-known school for real estate. And I was particularly interested in propcos and opcos and sapcos and all these different ways of unitizing real estate. And that's what got me actually away from the real estate business. And I became a banker, an investment banker, or we call them merchant bankers, for a company called Robert Fleming, which was a very old school merchant bank. And it was a wonderful place to work. And that was at the time of the IPO boom of moving companies to London, the London Stock Exchange, and just a worldwide boom in equity issuance, at which we raised, I don't know, maybe almost 90 or $100 billion for 400 or 500 issuers in the time period that I was there. And then we were acquired by JP Morgan in 2000. And I moved, and I could see that the world was moving towards private markets and away from the IPO business and the public markets. And I ran the UK and Nordic region for the private funds business, and that was advising pension funds and endowments and long-term investors, so not in the public markets, but in private equity investments and hedge fund investments. It's called limited partnerships. In general partnerships, which are run by investment managers. And that was very interesting. And again, different sort of capital formation. And then I left JP Morgan and set up a systematic CTA, or commodities trading advisor. And we were using, at the time, this is in 2003, what was very advanced at the time, which was Bayesian machine learning and a particular approach to building sector baskets out of the 18 sectors of the DJ Stock 600 and every other, anything else that we could really trade where there was trend. And it was really the learning of abstracting away from single stock stories and equity stories and reducing things to waves. And, trend following is really about, understanding which direction the market is going in and having a view to volatility. And you're not really as interested in the individual stories, you're interested in the aggregate of markets. And as they say, the trend is your friend. And so that was when I started getting into the mathematics of markets, I would say, and the systematic behavior of humans. So had gone from the very specific to the very abstracted, and we were successful in building that fund. And we sold that fund to one of the larger, or probably the largest in the UK at the time, systematic trading firms. And it was after that I invested in a business that was involved in cryptography and identity in 2007, and we'd applied for some intellectual property at that point. And I largely was just a passive investor in that company. And at the same time, I was trying to build my own sort of mini merchant bank, which was really a way to work with family offices and do sort of club deals. So again, a different style of investment, but again, all around funding and how to build businesses and how to effectively raise capital. And whilst that wasn't successful, it showed me the limitations of my capabilities in building software to go alongside what we were doing. And I also realized that there was going to be a period of turmoil in the European markets. And I decided with my wife, who's American, that maybe it was an opportunity to come to America. And maybe this is around 2013, 14. And of course, coming to the West Coast is, I thought, probably the best place to meet with other people that were very interested in the world of cryptography and in the world of identity. And I started to get really deeply involved again into the blockchain as it was then being regarded, and going on this search to try and find a protocol that would be suitable for the next wave of the capital markets and the next wave of really human evolution. And so, yeah, that's the quick narrative to how I got here.
Yeah, so if that's the quick narrative, I'm excited to also hear at some stage the long one, right? Because that's a very impressive overview already. So you kind of started, so to say, to speak in the latest terms, the CeFi space, but then kind of gradually, came to the DeFi space. What was that kind of, was there a certain moment to you that where you realized, okay, you do not want to be a part of that, traditional structure of the financial system anymore? What was that moment maybe? And, how was that process for you personally?
It's all about awareness, I suppose. I'd been really on the journey since 1992, and actually I can pinpoint the date. It was the 16th of September, 1992, and George Soros broke the Bank of England. And my father at the time was a real estate developer, and the interest rates overnight, because the Chancellor of the Exchequer wanted to defend the currency in order to stay in the exchange rate mechanism at the time, and put up interest rates. And unfortunately, my father had not secured long-term financing on one of his developments, and essentially rates, I think, went up to something like 18% overnight. Maybe it went from 6 to 18, but that's a crippling situation. Now, of course, George Soros broke the Bank of England and the interest rates came down, but it was illustrating something that then became, this nagging thought behind almost everything that I did. It jeopardized my family, it jeopardized my father's health, which deteriorated, and he passed in 1997. So it was something that really, it was not an intended effect of George Soros, and I certainly don't think George Soros is a bad person by any means. He did the right thing in the circumstance, which was to illustrate that the UK was maintaining a policy that made no sense given their financing position. And although I was young at that time, it sort of must have gone into my subconscious. But as markets evolved and I became part of the capital markets, and I saw how we funded companies and how businesses raised money and raised billions and billions of dollars, I could see how much positive effect the capital markets, and the digitization of the capital markets had on our ability to fund emerging markets, because Robert Fleming had a partnership with Jardine Fleming. And at that very moment, we moved from open outcry in markets to digital markets. And I was very young, I was only 21 years old, but we'd started using this book building software, and it was all about the ability to analyze the book and use this software, which I happened to be the better operator of. And I was over promoted, and I became probably the youngest syndicate manager, definitely in Robert Fleming's history. And it gave me a great exposure to a piece of the bank where you can look, you speak to the brokers and you speak to the corporate financiers, and you're communicating the message of the company, and the company is on these roadshows, and you go to 2 weeks of roadshows, and you meet thousands of investors and companies. And you imagine being young, you can see this, and I'm seeing how the capital is working. And then you go through the transformation where Spitzer comes out, the market goes through 2000, and you see what Alan Greenspan does at the Federal Reserve, and he takes rates to emergency rates. And so I'm seeing the outcome 8 years later of this amazing amount of growth. In America, it was in technology. In London, it was about all of the international companies coming to London as their listing entity, and then they were doing what was known as a GDR issue, Global Depository Receipt, with something called a 144A, which was the ability to sell into the US. And so I could see this distribution machine in process. And if you're sitting in one of these seats, all the other syndicate managers, it's a centralized business, of course, and all these other syndicate managers are speaking with each other, and they all speak with the brokers, and that's how product is distributed, and this is how companies are financed. And the next step was to realize after Spitzer that the market was changing and it was becoming private, and now again capital is being formed in such a way that the private market is able to use the low interest rate environment, and it's using leverage. And so you see, of course, you saw that before that, the beginnings of the leverage buyout market, but now you've got people that can access capital to utilize the low interest rate policies, and markets become privatized using limited partner, general partner structures. And so the next natural evolution, and we've been in that zone for a long time. So between 2000, I would say, and 2007, you had this run up. And then the GFC, the global financial crisis, which again was caused by the distortion of markets because of the cheap money and the carry trades that were going on. And then post the GFC, this was when, everything changed, because with Satoshi's writing, and I think, I've had in my Twitter feed that the person I believe that is Satoshi, I was in conversations about markets. I think Satoshi is a genius. He obviously solved the double spend problem and was interested deeply in markets and showed some great flair for understanding the dynamics of markets. And in the Genesis blog, of course, it says Chancellor on brink of second bailout. And that was only in the London edition of the Times. It was not on the web. So the understanding is that Satoshi is most likely was based out of London. And in that Genesis blog, it evidences really the end of a very, very long trend. And the trend is, of course, begins with Adam Smith in 1776 with the Wealth of Nations and the beginning of economics. And what Satoshi is saying with the message in the Genesis blog is that and again, just let's go to Adam Smith. Adam Smith talks about the invisible hand of markets, right? And it's always understood that that's the free market. But in the work of Adam Smith, it's also noted that this is the hand of economics controlling politics. And what we're seeing with that Genesis block is the idea that actually politics is now controlling economics. Chancellor on brink of second bailout is the inversion or perversion. It's no longer about markets. And so for people that were understanding markets and were trading on the basis of that you would have rational market participants and market clearing prices, and especially if you're a systematic trader that works on that basis, that is a very disruptive thought. And I believe that that has then characterized this latest era. So since, and I think he marks that era where politics is now controlling economics and markets, which there's always been this interplay, of course, and that was evidenced in 1992 with the perversion of the Chancellor trying to defend the currency from George Soros. So you see, again, it's always about interventions in markets. And with the Genesis block, we're seeing that it's really a word about moving to zero interest rate policies and issuing giant amounts of liquidity into markets. And that is continuing to play out, and it is what is causing our political problems, because when you have zero interest rate policies all over Europe and now post-pandemic in the US, what you have is a Cantillon effect, which is that the people with capital have the ability to make money and grow richer, and therefore the polarization of society between those who live what we call in the trauma loop, which is to say paycheck to paycheck, and are effectively fearful at all times, versus those who have capital to invest, can invest where they can borrow at 2% and markets are accelerating because there is so much liquidity pushing a limited demand, that you're effectively destroying the fabric of the civilizing effect of economics, when people don't perceive that there is any equity in the opportunity that they're presented with. They don't need equality, they need equity of opportunity. And myself as an entrepreneur could see that it is very difficult to compete now with the technocracy. And I think that's the other thing you have to note, is that the Wall Street, in inverted commas, vampire squid of the GFC morphed into the technocracy, which is essentially, Andreessen's thesis of software eats everything, or software eats the world. That software eats the world is the extension. Why? Because markets have become perverted by the obfuscation of not having to make profit. So again, it's the Adam Smith inversion that says Uber will lose 40 cents in the dollar and essentially drive people out of the cab business, override any sort of social constructs, and essentially buy network effects. And what we have seen, therefore, is technology companies are growing into effectively the monopolists of the new age. And I think that blockchain technologies and the wave that we are all in and that we are all interested in is about understanding the allegory of the bundle of sticks, which is that, you as one stick are easily breakable, but when you bundle the sticks together, you have great strength and you become unbreakable. And the innovation of Satoshi in the solving the double spend problem really illustrated a new form of cooperation and collaboration that takes advantage of communications technologies advances, i.e. Metcalfe's law, and also computational advances like Moore's law.
Yes, I mean, that's very great points you mentioned there in regards to, the current issues that led to this kind of pivot in your career, right? And kind of join the journey of decentralization and the push of decentralization, which is, I believe, as you mentioned correctly, with all the different aspects, the monopolies and out there in the world is crucial, right? That we can actually, have an enhanced structure in our society again, where it's not only centralized entities dictating narratives. So you mentioned Satoshi a couple of times, and you've been in this space, for such a long time. And I also saw that on Twitter you posted, actually a paper that was pre the Bitcoin paper from Satoshi, and you have some theories.
Well, it's from the person, just to be accurate, because I don't want anyone to think that I'm claiming something that I'm not. It's the person that I think is Satoshi, and so I just want to be clear about that.
Yeah. So why do you think for Satoshi it's so crucial that he's unknown still to this day? What is your thesis on that regard?
I think that he's a very talented, smart person that knows that the idea is much bigger than he is, and that if you put a face to an idea, then people get fixated on the characteristics of the individual. And furthermore, he's a sophisticated enough person to know that it doesn't matter, and that his privacy would be more valuable than than his association, because the types of people that can invent and have the depth of knowledge to do these things are rarely extroverted people. So, and that's probably all, the most that I'd want to say about that.
Yeah, I mean, it definitely makes sense, right? When you invent something with such a potential at this stage, when it was released, a large impact, it may be advised to stay incognito to a certain extent. So you mentioned already that you're kind of currently working on a couple of projects, and I know you're building the value Earth ecosystem, and one of the most immediate projects you're involved in right now is Verus, right? Which I personally have to say, not in that financial advice, but it's a very interesting project. And you also brought some interesting slides with you today that I would just kind of share, and then you can guide us through why Verus is so special and how it differs from existing blockchain infrastructure, so to say. So I would leave the word to you, and you can guide us through what the Verus project actually is.
Sure. Okay, so just to give a few words about Value Earth, that's really just an aggregation of various different initiatives to bring the technology to, or bring the next wave of the technology, or the next generation. So I think it's worthwhile sort of talking about what are the hallmarks of projects that are good. So what's special about Bitcoin, of course, is that it doesn't have a founder reward. It doesn't have a pre-mine. You could say that Satoshi obviously was the early miner, and there are the coins that he has offside. But in general, that it was a fair launch. And so if you have an ICO, or if you have a pre-mine, or if you have developer fees, you're affecting the ability to be a true public utility. And so that you want to try and strive to be a community project which has what people call a fair launch. And so that's one of the things. So if you go, and I was going around, and I was up on the, like you say, I was, looking for a protocol that could go with some of the intellectual property that we had around the USB. And when I say we, this is, if you look on value.earth, you see there's a company called Archetype, and Archetype had this intellectual property that was a USB that could take you to a remote terminal and exchange a public private key or a one-time password, etc. And so I knew that I thought that this was a good technology, and I thought it was interesting, and I thought that people would still need something physical. And so that set me on the looking out for different protocols to see who would be able to go alongside that little device that would be less than $1 that everybody could have, that you could get to everybody all over the world, and get them an ID, and get them a little bit of money, and get them started so they had a wallet, and that they could, protect themselves, et cetera, et cetera. So that was sort of the idea back in 2006-07, when when we first filed the intellectual property on that. And when I went round, I saw, I met with lots of different people from lots of different protocols, and I went to, on the conference schedule, et cetera. And, what I came to understand is that most people were like in my CeFi. So you asked me, I didn't think I really pivoted from CeFi to DeFi. I think I just evolved through the different sectors of the market. And I think you can see other people in the sector like Raoul Pal, who also, he was at Lehman, he was at, not Lehman Brothers, he was at, I think, GLG, managing funds. And then he became, more and more interested. And I think it's a natural evolution of people that are interested in finance, that they would end up in the blockchain world, or in the cryptocurrency world, or the cryptography world. So, so I think that was the natural evolution. Was I had some intellectual property that touched on cryptography, that had a way to connect to everybody all over the world. And I then went looking at protocols. And once I was looking at protocols, I needed it to have an identity module alongside a blockchain module. So that was one of the critical things. I needed to find someone who understood that identity was extremely valuable, but that people don't value it at all. So it doesn't have an inherent economic model. And we saw that with all the layer 2 solutions in identity. They are, owned by a company, or there's a corporation, or there's a nation state, or there's, that misses the point. If you want to be self-sovereign, if you want to be your own bank, you have to know how to be your own bank, which is difficult to do, which is the money over IP problem that Bitcoin suffers from, right? It's hard to buy natively, and that's why Coinbase became Coinbase, because it made buying Bitcoin easy, and it gave people access through the traditional system. So the necessity was to find at first a community project with a fair protocol launch, and that was very difficult in the blockchain space because everyone had to resort, except for Satoshi, to taking money from venture capitalists or from investors. And that sort of affects the community because it's no longer really a community. There's someone who's the boss, in inverted commas, or has an outsized influence. So that's the first thing. If we go to, I think, the next slide. The next thing you have to look at, if you're trying to be an entrepreneur or if you're interested in finance, you have to say, okay, I need to find a way to understand that the building blocks are security. So if it's going to touch money, the reason why bankers exist is because people are afraid of themselves in many ways. If you were storing all your money, that's why you don't want to store your money under the mattress, right? You put it in a bank because you don't want to be attacked. So that's, it's one of the elements of security and how you look after that money. But you need to be sure that behind that money, there is a secure bank. That's what's going to make you sleep well at night, that your money is not going to be lost. That's how it emerged from, the earliest times. And so security is the next thing that you want. And we developed, and again, Satoshi came up with a proof of work that's using computational power. That computational power was originally on PCs, but then as it became more and more valuable, there was more and more incentive to use more and more powerful machines. And we end up with ASICs that require cheap energy as far as possible to run the proof. And so it is, that proof of work is proven and it's safe and it's secure, but we came up with a proof of work that was optimized for CPUs. We being the community and the lead developer, Mike, came up with an algorithm that is optimized for the CPU. So you could think of the CPU as the ASIC for the proof of work in the Verus network. And that was, when I read that, I was like, oh, wow, that's really smart. That's, it's beyond smart. It's simply, a genius move. And then by making it 50% proof of work and 50% proof of stake, what you enable is participation that is, truly distributed and decentralized. That's the big problem. That if you're going to have security, you don't want it to be centralized. You don't want it to be centralized in the hands of the people who've got all the money. That's why proof of stake, one of the reasons why proof of stake in systems is probably not completely, fair, because if you have more money, you can have more stake. And then in proof of work, you obviously want to try and optimize it to a machine that can be owned by as many people as possible, so the network can be distributed, because blockchain is not only about decentralization, it's also about distribution. So that made me think like, oh, wow, these guys really thinking about this very, very in a very sophisticated way. And it's provably 51% hash attack resistant. So I can sleep well knowing that, that piece of the puzzle is taking the best of the known arts, combining them to create something that's even stronger than either of them on their own. So that's that's the security or the consensus mechanism, the way that you can agree things. So again, if I was to relate it to the bank, that's what creates the trust in the system. But this is a trustless system. That's the genius that Satoshi comes up with, is permissionless, trustless, unstoppable protocol. And then this is where ID becomes central. And this is where I'd come from, the identity world. And I'd acknowledged that people want what they want immediately. They want immediate gratification. They don't want delayed gratification. Everyone knows that the click has to be instantaneous. And so one of the problems was that you didn't have friendly names. You have these complicated addresses that made people nervous that they were going to mispaste it, they get the wrong address. And if you're talking about, and that's in the respect of money over IP, that's in the original innovation, you have money over IP, Satoshi's innovation. Well, it's evolution of the innovation. And with these difficult addresses and this fear that you could lose your money, it lends itself back to centralization. So you have to solve that problem. You have to say, okay, sorry about the dinging. Sorry. Yeah, so let me just silence that. The innovation is the ability to take the complex and make it simple. That's what Einstein says is the level above genius is simple. If it's simple and people can understand, then they know what to do. So you need to have friendly names, and those friendly names need to have been issued from the security of the blockchain, right? That is therefore self-sovereign. It's not issued to you by a corporation. It's not Microsoft. It's not Apple ID. It's not, US ID. It is issued by the blockchain itself. And the friendly name enables you also to have a revocation and a recovery ID. And that gives you also the ability to have a vault. So what do you want when, as a regular person, you want to be able to store your value, whatever that value is. You want to be able to sleep at night, that you're not going to be, it's not going to be stolen from you, and you don't want to be subjected to a $5 wrench attack, as they call it, where someone comes and forces you to give you their value, their money, whatever that is. And so the need for self-sovereignty, which is the whole point of being your own store of value, right? Your own bank, to have the ownership of your identity, and your identity is your story. It's all of the things that you do, which have gone from being in the physical world, and especially in this last year during the pandemic, to being, so much of your reflection of everything that you do is done in the digital world. And that, you can think of it as a fingerprint. That fingerprint of all of your digital interactions is of value to you because it's a reflection of you. And that reflection of you is something that you can monetize. And you have valuable information that whilst, and we spoke about it before, the bundle of six says you're not valuable on your own. When you create network effects, which is exactly what the surveillance venture capitalists have been funding, building network effects, when you own those network effects, you have $1 trillion market cap for Google, for Facebook, for Amazon, etc. So there's trillions of dollars in the networks. And so in order to participate in a network, you need to have ownership of your identity. And then you can aggregate that picture of yourself so that, like, you are your best advocate, you know yourself best, hopefully. You will also in the digital world know yourself best. So, it's like the religious words, know thyself, right? If you can know thyself and store that data, then there can be a public network that can use the AI for the public benefit, because of course the two ends of the spectrum that we're facing in the next era is artificial intelligence and cryptography. And in the balance of power between artificial intelligence and cryptography, you have the new power of the ability to own the collective data, the collective network effect, and contribute to that with full privacy. And so with the evolution of privacy technology, it enables the individual to share information with a public AI rather than an AI owned by a corporation or a government, and enables us to advance civilization because we are no longer subjected to the corporate world. There is this new organizational format called the blockchain where people can collaborate and cooperate for their own benefit. And they can also, because this information is now on a self-evident blockchain, public blockchain, or probably on a private blockchain, but probably to the individual self-evidently, then it enables us to build economic power in the collective such that we can advance technologies in the public domain. And that's why, again, you want to be using open source technologies. So identity plus the blockchain is the second building block that you need, but it has to be at the primitive level. It has to be at the base level because it needs to have an economic model that makes it viable for everybody to do this and simple enough that they can be self-sovereign in this way, that it doesn't require issuance from a centralized power.
That's very interesting, Nicholas. And I mean, I would love to dive deeper into this, but time-wise, I would at this stage also like to ask you a couple of other questions on that regard. But
Sure.
I encourage anyone, you know, to kind of check out Verus. It's a very interesting project, and I'm sure Nicholas is going to be able to give you some more insights. Before we kind of maybe dive quickly into the tokenization space in general, I would like to ask the weekly Being Crypto special question, where the community votes on a special question that they have for the respective guests of this show. And they had one question that I find quite interesting, and it is, what dangers might actually arise when we reach potentially, so to say, a fully decentralized global ecosystem? Or maybe there are no dangers, but do you see any?
Of course, that, you know, with great power, you know, and with great advances, there are immense dangers. And I think that we know what the dangers are because we can see what's happening in countries that don't have liberal, or not necessarily liberal with a, I mean, lowercase liberal, Western democracies, that, again, people also doubt the veracity of those. But if you are a citizen of China, you do not have the agency or the free will or, you know, the ability to participate in the world in the same way as people that are protected by a constitution and a legal framework and a free press, etc. So you can see the danger. The danger is that we don't establish our self-sovereign rights. So it's, I would say, we have the writing on the wall. We can see what happens when you have absolute power and what that does to minorities like the Uyghurs who do not have agency in their country. And we've also seen how the social credit system can be used against citizens. So I think the danger is not of these new technologies that unite humanity, but of these powerful technologies in the hands of corporations who extract rent from the world and don't pay it back in fair measure and don't protect the human rights, for example. And that, yes, this will potentially allow for some abuses, but I think that when we can create self-evident truths that enable us to verify and then trust, we will be able to collaborate and cooperate at a scale that will bring a new age of cooperation and a new age of, you know, I don't want to say it sound too fanciful, but a new age of abundance. And the alternatives are what we should be afraid of.
Okay, yeah, I think you summed up quite well there. So in that regard, I know you may have a different stance on some of my guests in regards to the securitization of assets, so to say. or the tokenization thereof. And but what would you say is currently maybe the low-hanging fruit in the tokenization sector? And maybe as a follow-up, why do you see tokenizing real-world assets maybe a bit differently than some people? Because I mean, I know your take on it, but maybe you want to kind of share it to the audience a bit and provide some insights on that regard.
I think what you're referring to in our previous conversations is that I haven't been overly enamored with people's desire to to use the blockchain for securitization purposes. And it's not because I don't think that as you know from my story, I went to university and my fascination was with securitization essentially. And then I've been in the securities business. But the thing about getting deals done is that you want to advertise your deal in the most liquid market. It's like selling your house. You wouldn't want to sell your house to an audience of one. You want to try and get it to as many people as possible. So you, in the same way, when you are an owner of an asset, you have to look at, what would be the best market to float that asset. Where will you get the best price is what people are looking for, and where will you get the most liquidity if you wanted to sell that. And what I've always contested is that the blockchain is not yet ready to take on markets like the REIT market. And furthermore, when people say, yes, but we securitized XYZ hotel in Aspen, you say, but the problem is that you've got a self-selecting bias there, because generally speaking, people who sell or who have an interest in real estate would want to use as little equity as possible and take the benefit of this low interest rate environment to fuel their equity, or to rocket fuel their equity with as much debt as possible, and take advantage of the inflationary or the asset inflationary environment. So I see people looking to the retail market, really, because that's what the blockchain is, to be the supporter of securitization. And for the most part, that was never what drove any equity story. It's always driven by the large institutional market. So until the large institutions come, people are going to be trying to sell a product in the wrong market, is my opinion. But it will evolve and it will come, and this is going to be the way it's done. I'm not saying it's not. It is. The old market, the old way, is going to go extinct. But for the moment, there's good liquidity in the traditional markets for most of the real equity stories.
So then, maybe looking in the future, how do you envision this token economy, playing out? Do you think, because I mean, there's a lot of believers that in the future the token economy will be something like where any sort of value can be exchanged with each other, whether it is a share of a company, whether it is maybe loyalty points, whether it is maybe governance token, anything basically. Do you envision that the token economy in that sense will play out in the future, or do you think that it will be fragmented and kind of akin to what's currently going on in the markets due to potentially some tighter regulations and that sort of thing?
I think that what is going to become possible is the ability of people to crowd fund and to participate in the creation of value. Those public, let's say, pools of value will enable much greater participation. And that greater participation, I believe, is the solution to the zero interest rate problem, which is to say that, yes, there's been a lot of capital credit created, and yes, there's a lot of that money is inflating both the real estate market, the equity markets, etc. But that the way that equity or that credit can be distributed is through the blockchain, which will empower all of those people that are excluded from the financial system because of its expense, because of its compliance expenses, because of all of these problems, that will actually be resolved by the third and fourth generation technologies, which is where I think we sit as a fourth gen technology, in my opinion, because it becomes a way to verify information. And that's all that investing is the ability to verify information. All that contract is words on a page that is signed by the right, duly authorized authorities. And if you imagine that everything is moving from paper to data, or from words to if this, then that contracts that need to be duly authorized by the secure signatory of a company, a charity, a government, etc., what you have is solutions to the information problem. And that's really what markets are made of: information asymmetries or time differences in purviews. So as information becomes more and more verifiable using blockchain technologies and zero knowledge proofs, you will get the ability to have much more transparency. And at the same time, you will need less regulation of those markets because they will be self-evidently true, because those will be the gateways. The gateways will be the verifiable proofs. And therefore, you can have much greater enfranchisement of both investors and issuers, because as long as I can make sure something is verified and contractually enforceable, if I can do that to machine, and I don't have to go through the old rails of the traditional banking system and the traditional accounting systems, then I've got a major opportunity on my hands, and that opportunity can be spread to everyone because it's software. And so it's what we are seeing is akin to the way I look at it, is that in I think it was 1441, the printing press changed the world with the dissemination of information via books rather than manuscript. And I think you have to look at the new era that is upon us now, especially post-pandemic, as the next big leap, which is moving from the internet to the internet of value. And the internet of value is where you could get, ideally, an explosion of opportunity for the 6 billion people that are not benefiting from the opportunity that we have.
Yeah, so that's I think definitely very interesting to see how this will play out. Obviously, regulations are a hot topic that may have an influence on that, but I fully agree that a combination of maybe a certain sense of compliance, but associated with zero knowledge proof, could kind of be a good solution, right? So hence, at this stage, coming to the end of the very insightful conversation, which I'm sure could go on much longer, I know from experience from our past conversations, but where do you see generally blockchain and this entire ecosystem in 10 years from now? Do you see it in a way that it will evolve, that there's obviously also now evolutions of other technologies that are similar, but that are in the DLT field, but not so much a blockchain? Do you see these type of technologies that IOTA is, for instance, using play out? What is your take on the blockchain space in 10 years, where I think, especially if you want to foster mainstream adoption, we also need a lot of more intuitive tools that are not pushed, obviously, by potentially centralized players, but actually from this decentralized space?
Yeah, that's a good question. All of the questions are good questions. I tell you, no one can say with any certainty where something is going to go, because, things happen. But I'll tell you where I would like to see things go. And what I would like to see is that people have recognized that Satoshi's innovation has enabled us to trust each other in a trustless way, and that the technologies that have brought about great innovation, like Ethereum and their developer network, And those developers have evolved more developers who have appreciated the sandbox that is Ethereum and have taken their talents and, as we've seen, developed the third generation of interoperable blockchains. And that, moreover, I'd like to believe that Verus would be the unifying substrate that enables everybody, because we've built an ETH bridge and everybody can build a bridge to Verus, and it is a fair launched infrastructure that is truly people powered and community owned. And that by understanding that we are stronger together, the blockchain community will have understood that the opportunity is to become the bundle of sticks together, to be less in opposition to each other and less defensive about our technologies and more collaborative. And that we've realized that if we do unify our aims and we get to a situation where we can bring self-evident truths into play through self-sovereign identity, we will be able to be using blockchains for elections and voting, and we will elect better leaders who we will have better information about, that will be verifiable and provable, and that we would then be able to strengthen our democracies and enfranchise all of the people all over the world to participate in what is a giant leap for humanity, which is the ability to create trustless, permissionless, unstoppable networks owned of, by, and for the people. And if we could see that in 10 years, that would be really excellent.
Yeah, I think that would be definitely amazing, so to say. Like, since you brought up the election topic, if it's fine, I would just like one follow-up question to wrap this up is, do you really believe that, governments will accept a certain blockchain-based, voting infrastructure for the respective elections, which then in turn would kind of jettison the need of a lot of the political infrastructure at all? Like, we could have direct democracies, we could have a way where, actually instead of humans potentially executing what, so to say, the people vote for, a smart contracts doing this. Do you think that a future like this is possible? Or in your opinion, do you think that the legacy systems are just too hesitant and will kind of always have their iron grip on the people, so to say, and will try to prevent this from happening?
Another good question. Well, I think that, if one observes the world closely, one can understand that, or one could have understood from about 2007 that we were going to move into, when we saw Facebook technologies emerge and social medias emerge, that it was going to affect the perceptions of humanity. And obviously part of what we're interested in is in self-sovereign conscious agency, and that humans are motivated by their perceptions, and perceptions control behaviors, and misperceptions create misbehaviors. And therefore, if your perception field is augmented by a black mirror or a mobile phone or a screen that is feeding you with information, you're going to have, just like any other system, a garbage in, garbage out problem. And that was foreseeable from 2007. From 2014, I think you start to see the word post-truth, and through the Brexit and through the 2016 election, we got to see the power of social media and how it enables a very simple sorting algorithm that affects the perceptions of people, and that furthermore, if in fact inflames tensions by putting people into echo chambers where they're not used to hearing the ideas of the other, whichever side the other is. And so in moving from, we predicted at the time that we would move from post-truth to being post-trust. And you'll see on my Twitter feed, I'm always hashing to this idea of post-trust. And post-trust is not to say that we're not going to trust each other. It's that we need to verify and then trust. So from that to the obvious understanding is that we need a technology that enables us to own our identity. And so the key to elections and the key to everything is identity, because you need to be able to prove verifiably that you have the right to express that democratic vote. And it needs to be able to be self-evidently true, but it also has to be private, because you can't vote on a blockchain where it's public, because then you're afraid to express your political opinion where someone has the threat of violence over you. So you need to have full privacy, as well as to have the ability for that to be self-evident. Now, obviously that sounds self-serving, but you will need a zero-knowledge tool, and you will need to be able to implement that in a way that everybody can trust. And so it seems to me that it is inevitable that blockchains will provide that technology, because it seems that we are post-trust. People do not acknowledge the veracity of election results, even when they are certified by the election authorities, because they have become convinced through the social medias that they are being lied to. And in many cases, the truth is that there were, I think the British politician once said, that he was being economical with the truth. Well, you can't be economic with the truth. It needs to be proven. And so I think it is inevitable we will get to systems, as long as we are self-sovereign in the ownership of our identity, and we have the protections of privacy, so that we can express our duly hard-won democratic rights, and protect our constitutions and our laws such that we can evolve together. So I think it will be inevitable that people will start to understand that the blockchain can offer, or blockchain-based self-sovereign identity can offer, massive benefits, whether you're on the right or the left. Everybody wants to know, in reality, the results that are fair and accurate, and that the information we're getting to make those decisions, the information that affects our perceptions, is accurate. And that is the promise of the technology, especially the technology of Verus.
Thanks, Nicholas. I mean, it was a great closing statement, and I think it will be interesting to see how this all plays out, and how fast politicians and governments will kind of realize the impact blockchain will have. I think here and there they do it to a certain extent, but obviously not to the extent that people in the industry that have been there so long as you do, and hence I believe it will kind of be an interesting balance, just curious to see how this all plays out. Sorry,
I want to just to make a comment about that, is that every time we speak, or I speak with people, they always talk about the government as if it is something that is external to them, as you just did. Mm-hmm. You have to remember that you've earned the right to be part of that process by being a citizen of the country, by paying your taxes, by doing all these things. And what has happened is we've given up that agency because we become tired of the narratives. We become tired of arguments not based on self-evident truths. It's hard to discern the truth. And that's why you should know, and everyone listening should also think, is that you should never refer to the government as if it's something otherly, and it should become something that is more clearly linked to our personal agency, because that's what's going to protect us in the future. Revolution is not going to be the way. It's going to be the evolution of systems that provide us all with self-evident truths that can allow us to participate in the world through the great, advances of democracy in using law to avoid violence.
Okay, now you kind of overcame your previous statement. It's that's actually true, and it's kind of this misconception you always have, because you feel like you don't have that direct access, right, to what's going on. But let's hope blockchain will solve this in the future, and I think what you guys are building at Verus is definitely something that can be a solution to this. And it was a great conversation, Nicholas, and I'm looking forward to speaking again. And thanks for doing this interview with me.
It's my pleasure, and as always, I apologize for my long talking and rambling answers.
No worries. I think it's it's needed at times like this, and hence it's just coming at the right time. Don't worry about it. So at this stage, I would like to thank also the listeners, whether in the live recording or at home and with the audio or video on YouTube or Spotify and Apple. If you have any questions in regards to blockchain in general, I'm sure you can reach out to Nicholas. You can also find him here and there on Clubhouse, jumping into rooms. If you have any questions in regards to tokenization, as always, you can also reach out to me, and I'll see you in the next show. Thank you.